it over to Robert, so our friends here from Alesco can give us a good report here today. And Robert?
Good morning. I'd like to call the pension committee meeting to order, and at this time I would like to turn the meeting over to Tim and Jen from Alesco Advisors.
Great. Good morning, everyone. Glad to be here. I'm Tim Tyndall with Alesco, and I'm going to run through the performance and the asset allocation of the pension plans, and then Jim will have some comments on the capital markets and sort of an overview. I just want to make sure I'm cognizant of time. How long do we have here?
Yeah, 20 minutes.
20 minutes, perfect. All right.
4 minutes.
Excellent, thank you. So, hope everybody's year is off to a good start. Winter's finally arrived, at least from a cold temperature perspective.
And a happy new year.
Exactly. But the stock market, though, has been a little bit warmer of late after a very difficult year overall in 2022. We have had a very nice rebound in asset prices over the fourth quarter, and that has continued so far this year into January. Diversified equity in the pension plan is up over 6%, and that's on top of a 10% gain that we saw in the fourth quarter. And that has really tempered the losses from the bear market last year. The gains were driven by a decline in inflation, on month-over-month inflation that we've seen. The stock market has appreciated that because it's a sign that the Federal Reserve is going to be able to temper their campaign to raise interest rates and sort of slow that down because inflation is coming under control. The big change in the capital markets last year that we noted was really a reversion to the mean. The winners in the stock market and performance of asset classes over the last couple of years have now become the worst performing asset classes and vice versa. So that's an interesting dynamic that you'll see in the report that I'm going to go over. And we can start with that. After that brief overview, if we go to tab A and page 1, just an overview of the asset allocation of the non-salary plan. The equity at the end of December was at 65%, 64.6%, so roughly 65-35 equity to fixed income asset allocation for the non-salaried plan. The 35% in the purple and the blue pies are also fixed income. Real return assets are the inflation protected securities and also the nominal fixed income. So overall 65-35. On page 2, is the equity allocation of the non-salary plan. Roughly 70% domestic stocks, 30% international. At our last meeting, I highlighted some of the changes that we had made in the fourth quarter, or we were going to make in the fourth quarter, related to reducing large cap exposure and putting some of that money into the small cap and micro cap areas of the market. That was a change that we made in October. And the timing of that was somewhat fortuitous from the performance of asset classes since then. While large cap stocks have done well, small cap has actually outperformed since that time frame. So the timing of that decision was very positive. We haven't made any other changes to the equity asset allocation since then. We also made a change on page 3. I highlighted in the bond portfolio, looking at reducing the short-term and short-term bond exposures that we had. We, in effect, slightly extended the duration of our bond portfolios. And again, the timing of that was very positive because actual bond prices have gone up. So bond yields have actually dropped just a little bit since the last meeting that we had. So having a duration on our fixed income, which is closer to the overall bond market, has been positive in a time period where bond values have gone down, or yields have gone down. That was a positive thing that we saw, and you'll see that show up in the performance. No changes on page 4 to our real return or TIPS holdings. We continue to have a slightly shorter duration to the overall TIPS market as well in this portfolio. On page 5, we'll take a look at the performance. We're looking at a couple time periods here. Quarter to date, 1 year. We're looking at this market cycle since the recovery from the bottom of the COVID bear market in 2020, and then our inception performance, which is just slightly before that. So you can see in the quarter to date, that was again the September to December time period, the overall pension plan was up about 7.5% during that time period. And since then, so just since the end of December, looked at the data as of the close yesterday, you're up another 5%. An additional $1.7 million and $34.5 million as of the close the day before yesterday. So that's really been helpful from an asset growth perspective, getting back to where we were fairly recently. The one-year numbers, though, as you can see from at the end of December, it was a tough year, down 14%, a loss of $5.7 million. But the rolling one-year number from just January to January, we're looking at a decline of about 5%. So this asset recovery that we've seen over the last couple of months has been very positive. The period since the end of beginning of April in 2020, you're still looking at a roughly just shy of 10% return, or $8.1 million. So the market gains, we've kept a lot of them, even with the bear market that we experienced last year.
That 9.7% is an annualized number, too.
Correct.
So what it does is the 4.15%.
Right. And then the inception numbers, which were January 1st of 2020, up just over 4%, or $4.1 million. Page 6 will just give you a quick highlight of the underlying performance of the asset classes that are representative in the overall salary plan. And in the quarter to date, just to highlight the performance, certainly of the S&P 500, you see that in the quarter to date column on the left-hand side, up about 7.5%, certainly a positive return. But if you look at the asset classes below that we have exposure to, the large cap value, mid cap, small cap, and international especially, all those asset classes have actually outperformed the large cap performance. And that's that reversion to the mean that I mentioned in my beginning comments. Those asset classes have been the ones that underperformed over the last couple of years, and now in this new interest rate environment, higher interest rates, the asset classes outside of large cap have started to perform better. And we've continued that performance so far this year in terms of international and small cap outperforming large cap market. International is doing particularly well because the US dollar has declined. There's a likely to be an interest rate differential between the United States and foreign countries, and so having higher, a movement of interest rates moving higher in Europe and Japan likely to affect the interest rates around the globe from that perspective, and international stocks would actually do better because their interest rates are higher because the dollar a little bit weaker given the dynamics in those markets. So that's a trend that we'll be keeping an eye on over the next couple of quarters. In the one-year numbers, you look at the performance as well. Outperformance on a relative basis of small cap and value stocks compared to large cap. But it was a very difficult year for equity markets and all asset classes, and you can see that. But the smaller capitalization and international stocks actually did a little bit better on a relative basis. So a diversified portfolio that had exposure outside of the large cap US domestic market actually did a little bit better. And that was the portfolio that we currently have in place for the pension plans. And when you look back, that same trend follows in the April to December time period. In the next column over, a return of 16% for equities, almost 17%, and then a little bit behind the historical averages since the inception date in terms of overall equity at 5.28%. But large cap stocks, the winner during that time period. But again, the interest rate environment was much different in the beginning of 2020 than it is currently. On the fixed income side, just a quick highlight here, we look at that performance. Overall, since the inception date, just very historically low returns out of bonds during that time period. And that's in part because interest rates have moved up so much, or bond prices moved down. It was actually the worst year on record for bond performance last year, down about 16%. And in comparison, the next worst year was 1994, and bonds and when interest rates again moved up pretty high that year, bonds were down 3%. So it was a historically difficult period for bonds last year. But the silver lining that we're going to see is that obviously bond yields are much higher, talking about higher yields on all assets, and that will be a silver lining for investors, that higher yield, better total return for bond investors. Just looking at the numbers really quickly, you can see the performance is very close to the average or the index in the quarter to date period. That's a reflection of us extending that duration, having the performance very close to the bond market during that time period. And then having a duration that was shorter than the bond market over the past year or so you can see our relative performance. As difficult as it is to look at a negative 11.5% return for bonds, it was still a little bit better than the overall bond market, the down 13%. So that shorter duration that we had over the past 2 years, helpful from a relative performance standpoint. And finally, we talked a little bit about the real return assets, or the inflation-protected securities. They adjust both the price and the yield as CPI has been going up. And you can see over the time period that we've had a relationship with Centro, those real return assets have outperformed the fixed income market. So providing some diversification in the fixed income returns. Any questions at all about performance or the allocation?
You said you extended duration of the portfolio?
Yeah.
What is it now?
So the duration right now for the overall fixed income is a duration of about 5.8 years versus about 6.2 for the Barclays aggregate. And we have been down at about 5.3, 5.4 before that.
And what's the return on the portfolio on a current return basis, meaning the income?
So the income right now, we're getting a yield of just under 5%, 4.7. And that's up from June 30th, about 3.7. So it's come up. It's backed off a tiny bit from September, but we're still getting just under 5% on the yield for overall fixed income.
On the tips, they're related to inflation, and going forward, the inflation numbers are coming down. They won't perform quite as well.
That's true.
There's two things though. The reason, if you look at why TIPS had a negative return for calendar year 2022 is because of the duration characteristics of the Treasury inflation protected security. So you had a bump up in the value of the bond that's tied directly to CPI, but offsetting that is the fact that these bonds are maturing laddered out over time. This is these are funds of TIPS that we have. And so that duration, the interest rate sensitivity to any Treasury investment also applies to a TIP. And so you had, but that's why TIPS did better than a non-inflation protected Treasury, because you had that offset to the step up tied to CPI. Now, though, when we have the inverse of that, it is, as Bob was suggesting, if we see interest rates decline a little bit, as we saw in the fourth quarter, now we're seeing positive nominal returns for TIPS with the inverse of that. So the duration characteristics are helping. The longer you are in duration, as interest rates drop, just like with any other Treasury, the higher the returns are going to be. So the net of all this is, you may say, well, why the heck do we even own the things, if that's the case, is that it is, just as we saw last year, they do act as an inflation hedge. One of the things that is so, the reason they were so negative last year wasn't because of inflation, it was because of the duration characteristics, the length of maturity that we have to go for those bonds actually mature. That's kind of complicated, I know, but it's, just wanted to go through that with everybody.
The last thing, just quickly, I just want to highlight page 7, just to look at some comparative performance of different types of investment options the plan could have been invested in over the last couple of years, and compare that to how the Alesco managed portfolio for the pension plan, the non-salary plan, has done on a cumulative basis. And what we're looking at here on page 7 is a couple different options. The first column next, the green is obviously the pension plan performance for the non-salaried plan in each one of the calendar years, and then the cumulative return over the last those 3 years. The comparison in the darker blue right next to it is a global equity and bond, a blended index of 60-40. That's very similar to what the portfolio is that's managed by Alesco, but at index holdings. The second lighter blue at 7.5% in 2020 is just the Morningstar median performance of managers with a global allocation fund. So you can see that performance. And then finally, you often hear a lot in the media about hedge funds and how they do, and that's a comparison as well. So you can see that the equity holdings and fixed income holdings, the mix that Alesco has managed for the pension plans, in all the time periods has actually done a little bit better than some of the other options that you could have been invested in. So it's just an interesting comparison, both on the individual calendar years and then the cumulative returns as well. So just an interesting comparison to see that, what else is potentially out there. I'll skip over page 8, 9. Those are 10, those are holdings of the pension plan, just in the interest of time. I'm going to keep moving along. I won't talk more in depth about the salary plan or the Utica plan because they're all allocated in the same way, and you'll see that the performance is identical. But just for the record, I want to run through this so we know we cover it. Page 11 is the salary plan allocation. You'll see it's roughly 65-35 as well as the non-salary plan. Page 12 is the equity allocation, very similar as well, 70-30 between domestic and international. Bond holdings on page 13, we made both of those same trades that we did in the non-salary plan. No changes to the TIPS portfolio holdings on page 14, and you can see from performance on page 15, similar types of returns as the non-salary plan, about 7.5% in the quarter, down for the full year, but we're seeing the same gains of this portfolio so far this year, up about 5% in January. 16 and 17, same reports in terms of the underlying asset allocations. And finally, on page 20 in tab C, the Utica plan, you'll see the equity allocation, 64%, again, similar, 65-35 equity to fixed income. On page 21, the equity holdings, page 22, fixed income, same, extended our duration and added to small cap, reduced large cap. And then in the Centro Utica plan on page 24, the same performance. Gains of 7.5 in the quarter, losses for the full year, and up about 5% so far this year through the close the day before yesterday. So with that, I'll turn it over to Jim just to provide a little bit more context on the capital markets and what's going to happen.
Thanks, Yo. So we just have a few minutes left, so I'm going to really hit the highlights and just see, maybe even before I do that, just see if there are any questions as it relates to some of the macroeconomic issues that are brewing in our country and around the world. So what I'll do then is, anybody have anything specific? If not, I'll just get into it and just talk about the big issue, as you're probably all aware, is inflation. You know, we have to get inflation under control. It's painful. The Federal Reserve is very clear in terms of their communications, in terms of how serious they are about fighting inflation, and also very clear about the ramifications of that. Part of what the Federal Reserve is doing intentionally is destroying asset values. It's driving asset values lower. The asset values in the capital markets have declined. Bond prices have dropped. Stock prices have dropped, as Tim was just talking about. We're starting to see real estate assets decline. And so what happens is when asset prices drop, people feel poorer because they are poor, and they spend less money. And we've seen that as it manifested itself in retail sales. Both November and December we saw declines in retail sales in the U.S. Consumers are starting to rein things in. That's happening because of the pricing pressures that people are dealing with. We all are, the price of eggs is, that's not so much inflation, but more specific, but price of food in general across the board going up. We're all seeing the price for food out of the restaurant. Price of just about everything is other than energy, where we've had a big decline. But most consumer products, most consumer services have gone up. So we spend less, we do less. And that's exactly what the Federal Reserve wants, is we're slowing the economy down. So the GDP data that came out yesterday at 2.9%, that's a really interesting number because it's a positive number as it relates to the ideal situation, which is that the economy slows, inflation declines, but we don't go into a deep recession. If there is going to be a recession, it hopefully is shallow and short. And that's referred to as a soft landing, or no recession at all. And that's what the Federal Reserve is focused on. So inflation is job number one, is the number one focus for our economy. A lot of the things that we're all going through together will abate as inflation prices drop.
Jim, any data on the job market as we've all struggled for employees?
Yes, so the job market is the tricky part. Labor price inflation is the big issue that the Federal Reserve is zeroing in on right now. So what happens with labor price inflation typically is it lags behind the price of stuff, goods. That's exactly what's happening right now. So the Federal Reserve is expected to slow down the rate of increases that they're making with their Fed funds rates, and it's projected that they're going to, it's expected that they're going to make a 0.25% increase in early February. The reason for that is they recognize that there's a big lag effect between when they raise interest rates and when it actually it's fully felt by the economy. The issue with labor price inflation right now is we have about 1.7 job openings for every one person who's unemployed. So there's still a lot more demand. And so the impact of that is, as an example, we talk about organized labor. Organized labor is the discussions as it relates to wage negotiations is different than it was just a couple of years ago. It's different for not in any labor environment on an individual basis. The negotiation, the power that a worker has relative today in negotiating with their employer versus where it was a little while ago. So that all has to play through the system. What we are very likely to see is we're likely to see labor price inflation as, not that layoffs are painful, we realize that, but as layoffs occur, we're seeing more layoffs. That brings more supply of people into the workforce who are now unemployed, and like anything else, when demand is constant or declining and supply is increasing, the prices are going to soften. The price of widgets, that's also the price of people. So we are going to probably see some improved labor price inflation, lower levels of inflation in that regard. Tim mentioned a little bit earlier about the international investment arena and how the weakening of the dollar has added to U.S. investors' returns for their investments, our investments outside of the United States. So we're getting a tailwind in terms of pricing as it relates to currency. That's a trend that could very well go on for a while. And so the diversification benefits of owning international in a portfolio, even though the liabilities of these funds are all dollar denominated, there's still a very attractive diversification benefit in owning international equities. And then just with regard to valuations, I think the bond market's easier to figure out than the stock market when it comes to valuations. We talked about that just a little while ago, Tim did, is that it makes a great deal of sense to us when we're looking at yields that are above 5% versus yields that are at 3%. We see, wow, that looks more attractive. I'm more interested in putting my money in bonds when I'm getting over 5% versus when I'm getting 3%. Same thing is true with the stock market. The stock market's pullback, the decline that we've seen, that makes stocks look more attractive today. The companies that we're investing in on behalf of these retirement plans are trading at lower prices relative to their earnings, the cash flows, the asset values that they have.
That I think helps out with the dollar cost averaging model.
Amen. That's it. You're putting more money into the plans, that we're coming in, we're buying at cheaper prices, and then as portfolio managers, we're rebalancing the portfolio. In the way we rebalance is really through the distributions. When the distributions are coming out, we're going to sell more of the things that are highly priced, they're highly weighted relative to our targets, and that brings the portfolio more in line. When cash flows come in, we're going to be putting that new money into the parts of the portfolio that are underweight relative to our strategic targets, and that rebalancing helps. So the key thing is with any long-term investment program is to make sure we have the right design, the right strategy, the right allocation for the portfolio to begin with, and then B, the tricky part is having the discipline to stay with it, because it's tough. it's tough when the markets are dropping like they did last, and particularly the bond market. We haven't seen anything like that ever before. As Tim pointed out, 4 times the next greatest loss ever in the bond market. So really a crazy year in 2022. It is in a rear view mirror, happily, and I think we have a very positive outlook as it relates to where the capital markets can go over the next few years. It's never a smooth ride. Maybe rarely is it a smooth ride, but we do feel that the portfolios are poised to fully participate in a market recovery.
Any questions for these folks?
And just so everyone's aware too, is we have been in contact with Bergershine, who's our actuary, and we'll be having a meeting with them next week. The initial projections are right now that even with the not great market year that we're coming off of, we're still in the mid-70s% funding range, which is fantastic, really. You know, anytime you keep that number north of 70, we're in good shape. And then, you know, obviously, you know, with some additional funding and a hopefully positive market year, that number will get back up in the 80s where it was.
Yeah, good.
At this time, if there's no more questions for Tim and Jim,
Thank you.
good job.
Thank you. I appreciate it.
Nice to see everybody.
All right.
Thank you.
Enjoy the rest of your New Year.
A couple things here. Linda, some of these have been spoken about last month, because last month we didn't have a quorum at the full board. So I just want to make sure everybody, we have to reapprove certain resolutions and motions because we did not have a quorum. So try to do your best when we could to we get a quorum at these meetings, because some of this stuff, it holds up the operation here by not being approved. And with that being said, you're gonna see some things from a legal standpoint. We talk about approving something and ratifying something. Brad, can you just for a moment talk about that? Because we don't usually see ratification in some of our work.
Sure. So typically when we vote on any resolution, you know, the word we use is approved. The word ratify is going to be used in a few instances here for things that the board voted on last month. Last month we had a kind of strange situation where we initially, you know, there was a quorum at the beginning of the day, but then we didn't have a quorum through the full meeting. So to eliminate any doubt about that, we want the board to vote again to ratify the actions taken in the last month, just so that it's clear that they've been voted on and approved properly with a quorum. Any questions about that?
Okay. With that being said, I'm gonna turn it over to Linda to start the discussion.
Okay, the first item was the November statements, you know, from the December meeting. Are we gonna just ratify that now, or?
Yeah, actually, so the November 3rd statement of revenues and expenditures, we discussed. For folks that weren't here, it was sent to you. It was strong financials. I don't think we need to go read through that. So we did already approve that to go to the full board, so I'm not gonna ask for an approval here. We do have the approval under a form, and then I'll bring that out into full board. So we'll move to December 31st.
So for quarter ending December 31st, our statement of net position is in good shape. We have a quick ratio of 7.57, which is an increase compared to December 21, where it was 6.28. Current assets have increased to about 8.7 million, which is 24% compared to December 21. Cash and cash equivalencies have improved 3.4 million, or 15% compared to December 2021. Receivables have increased 4.8 million, or 97% compared to December 21. Excuse me. Current liabilities increased 321,000, or 7% compared to December 21. Payables and accruals, they've decreased by 265,000 compared to December 21. And accrued salaries, liabilities, and benefits also increased by 172,000 compared to December 21. So, any questions on the statement of net position? Moving on to the consolidated statement of revenues and expenditures. After 9 months, we have the consolidated income is 7.3 million, another increase from the prior month. Our operating revenues right now are 1.5% over budget and 4.3% over prior year. Our ridership is trending 10% higher than the same period in prior year. However, our fare box revenue is lower than budget due to our fare restructure. And past sale revenue is also trending below budget and prior year due to past exchanges and refunds from our fare restructure. Special line revenues are 4% over budget, and that's because of increased service requests from our contracted service customers. Advertising and other revenues are 9.6% over budget, primarily due to additional FlixBus and trail releases favorably performing RTC parking revenues as well. Expenses, operating expenses right now are 8.7 million, or 14% under budget, and just 1% over prior year. And most of our expense lines are still trending the same as prior months, with the most significant variances are still our healthcare, our workers' comp, purchase transportation, materials and supplies and services. And this is a favorable trend. We do anticipate expenses to trend closer to budget in the upcoming months. In December, our UMR IBNR report continued to trend 889,000. However, there are 1,704 fewer claims and 11,349 fewer services reported to UMR than in prior year. Workers' comp still trending the same, 26 fewer claims in current year compared to prior year. And as you can see on the purchase transportation line, it's trending over budget, and that's due to ridership returning to pre-pandemic levels. Currently, the vendors are operating approximately 76% of our service requested. Non-operating revenues are just 2% under budget. This is consistent with prior year. Federal assistance is under budget and 29% lower than prior year. Mortgage tax is trending 9% under budget. However, it's 13% under prior year. If you look at, is there any questions on the statement at this time? If you look at the mortgage tax statement on the next page, you can see this month, probably the lowest in this fiscal year. One of the things Brian pointed out was that in Onondaga County, they've been having issues with the system for recording mortgage taxes, and that it could be contributing, or is contributing, to the decrease in Onondaga County.
We'll still get the funds, it's gonna be delayed. That's why you're seeing a little bit of a variance there in the MRT.
And they've corrected the problem with the system now.
They did, and it was up, and then it went back down, and it's now back up.
And they say it's gonna take.
Yes,
They're
now
lagging,
they're working on the
yeah.
backlog. So if you were to go to the county right now and try to get abstract title work done,
Right.
I think they've built a wall around it. I don't know how many things can in, but, yeah, they're working on it.
Next is the statement of cash flows. It's in good shape. Overall, we have $26 million in cash. Our quarterly investment report is also included. This is just showing where the funds are in the money markets and the treasury bills. And that's it for the supplementary reports.
Questions for Linda? Pretty healthy report again. No questions? Can I have a motion, bring it to the full board for approval? Tina, second. Robert, any questions? All in favor? Aye. Okay. Moving, the next thing is I just mentioned, we talked about it the last meeting, Jackie, the company that won the insurance. Sunlight, but that is 200, what's our stop loss? 250, yeah, 200 for college, that's why I get mixed up. 250, okay, so that was competitively bid, vetted, and everything else, and that's something because we're self-insured. So I'm not gonna ask for another one that was approved at the last meeting. So, then we'll move on to, the substance abuse policy modification, Jackie.
Good morning, everyone.
Morning.
So Central underwent a New York State DOT audit for our drug and alcohol policy and procedures. This is very typical that we go through. Through this audit, they recommended some modifications to our substance abuse policy. I highlighted those in the packet so you can see what those modifications were. Very minor, didn't change any of the substance of the actual policy itself. Obviously, they want us to note that any use of marijuana is illegal for a safety-sensitive position, being that even though it's legal in New York State now, it's still illegal, and anybody who is a safety-sensitive employee here cannot be under the influence of it. So we added that to our policy along with updating our medical review officer in the policy. If you want a detailed policy description, I have copies here. And this is part of the FTA regulations that we have to abide by. So, which is administered by Mr. Morial, and I have to say thank you, Mr. Morial, for all the work that you did during this audit. So.
What is safety sensitive?
That was gonna be my
Okay.
question.
Safety sensitive is our drivers, our dispatchers, so anybody dispatching the driving, and our mechanics who are working on the buses. Got it all? Okay.
So, but any administrator could,
Administrators, no, are not
They-
safety sensitive, however, they
However,
are
they can
covered
still not
under.
light up.
Huh?
They can still not light up.
okay.
They are still covered under our policy because it's company policy that everybody is tested. And that nobody, is under the influence of marijuana.
Right, so because you're
Everyone's
federally
subject to
funded.
random drug testing.
Right, so because you're federally funding, basically everyone, okay,
Yep. Any
Yeah,
other
this is a
questions?
drug-free work environment.
yeah.
Yes. So we just need a motion to approve the changes
Yep,
to the
any other
policy.
questions? Any questions? No? Okay. Motion, I think Monty, second, Julius. Any questions? All in favor? Aye.
Thank you.
Okay, very good, good job on that. It's not easy to do. We're gonna go to opening, a new account at JP Morgan.
Yes, I'm asking to open another account at JP Morgan Chase Bank. This is to diversify funds more, and so we can earn better returns. We're basically opening up the same account that we asked you to open almost a year ago, with the same products and services as listed into the resolution itself.
So Linda and her team, they shop sometimes rates and everything, so it's good to establish and keep that competitive. Any questions for Linda?
What are the returns now?
Right now, everything I have over at JP Morgan has been put into treasury bills, and they're earning anywhere from 3.5 to almost 4%.
That's pretty good.
The money markets themselves, I think, we're earning more at M&T Bank. What is that right now, 1 point?
M&T is 1.75, JP Morgan is like 1.25.
Yeah.
Do you consider cash was getting .05
Right.
a year and a half ago?
That's huge.
Big change.
It's free. Okay, with that being said, I need a resolution for to a JP Morgan bank account. I need a motion. Robert, second. Neil? Any questions? All in favor? Aye.
Aye.
Okay. Moving on to resolution number 4B, authorization to establish a capital reserve fund for the paratransit fund for $3.3 million. Linda?
Yeah, that's a typo on top of there. It's actually a paratransit reserve fund. We're asking to set aside these funds. 3.3 million is what we are asking to have whenever, you've seen it on the financial statements how much our paratransit services is costing. It's increasing monthly. By the end of this fiscal year, we'll probably be almost $1 million over what we were in prior year. So to help with future extraordinary costs in paratransit service, where we might be exceeding budget, we would like to be able to use this reserve to help offset costs.
So this will limit the impact on the overspending for the year on the general fund, so we can just bring money in from the reserve. So we've created some healthy reserves.
So where are we getting the 3 million from?
That'll be funded out of the general fund.
Yeah, we were gonna pass a hat, so.
So
we borrow your
what are we doing with these reserves? They were in general fund, we're basically doing a board designation. So we show that, and then through the audit, we know those accounts are separate. We see it that they're board designated, so then, you know, you have to go back to the board to undesignate them. So, it's good accounting practices. It's really good. As long as you have money, it's good. If you don't have savings at home, you don't have savings. All right, same thing, but just bigger dollars.
And as we run out of our federal dollars that we've received during the pandemic, you know, we're gonna be relying on our funds again. So these funds that we've been setting up are gonna be there to help offset deficits in the future.
Okay. With that being said, I need a motion to establish that. Tina, Absolutely. I was expecting that. Okay. Second, Llewellyn, any questions? All in favor? Aye. Now we're gonna be moving on to,
4C.
4C here, additional, let's see, 4C, authorization to add signatory to the CNY RTA Central Bank accounts. Linda?
Yes, I'm asking to add some more signatories to all of our accounts at M&T and all of our accounts at JP Morgan. This is just so we have the availability of more signers in the building when needed. So we're asking to add Brian Schultz, Mike Fitzgibbons, Jeff Hoff, Jackie Musengo to be authorized signers on these accounts.
Any questions? Need a motion? By Julia, second by Darlene. Any questions? All in favor? Aye. The other thing was basically we're ratifying, and Caitlin did a great job presenting the 64 bus procurement purchase. Caitlin, just one comment on funding for that, for the board members that weren't here.
Sure, so it's gonna be a mixture of federal and state funds as they become available. We're not taking delivery of these buses until September of '24.
So from federal, state, local, if you could break down an average percentage about.
Oh, I cannot do that.
Sorry.
Probably about 50% is 100% state dedicated funded, and
Right.
then the other 50% is 80-10-10, federal, state, local.
Okay, good. It's a small percentage local, small, that's the point actually I wanted to make.
10%.
Yeah. Okay, so, once again, that was already approved, we're gonna approve that at the main meeting. And then we're gonna move on to, resolution 4D. See, that was 4D, I'm a little bit confused today, folks, because I'm blending two meetings, and I can only remember so many things. So, let me see here, the Washington, piggyback 19 bus purchase, Caitlin.
Good morning, everyone. So this resolution is to purchase 19 diesel buses. We have 13 30-footers and 6 35-footers. The pricing we received from Gillig is $583,000, $583.80 for the 30-foot diesels and $588,384 for the 35-footers. This pricing came from the Washington State Cooperative Contract, which we are allowed, we're authorized by the FTA to purchase off of. So we're looking for award to Gillig Corporation.
This is different than from the
Yeah, go ahead.
64?
Yes.
Correct.
When are these doing?
So these are, yep.
2024 still?
Yes.
Yep.
Got a lot of buses coming in 2024.
Here's them rolling on the property. I could remember probably 12 years ago our last major purchase. Yeah. A lot of them were, they were Orions at the time, actually, when they were new. Any questions for Caitlin? Oh, Robert.
What's the useful life expectancy?
12 years. 12 years. It's Transit 101.
What happened to the bus after?
Want to talk to that?
Some, depending on the condition of the bus, some of them may go into our contingency fleet, which right now is about 5 to 10 buses, and the rest of them would go up on public surplus for auction. And if they don't sell, we scrap them.
So it dwindles $500,000 over years. Okay. Sometimes parts get old when you get old. I feel it. Okay, so with that being said, I need a motion to award contract for Gillig Corporation. Luella, second. Tina, any discussion? All in favor? Aye. Okay, Caitlin's gonna stay up for a resolution on backup generator installations.
Yes. These backup generators are both for the Auburn and Oswego facilities. This will be paid for with grant funding, an 80-10-10 split of federal, state, and local funds. This invitation to bid was publicly let on November 15th. We sent out 77 bid packages, and 8 additional bid packages were requested. On December 21st, we received 3 bids, and the lowest responsible bidder was Patricia Electric. They offered a price of $233,000 for both locations combined. So we're asking for contract award to Patricia Electric.
Questions? Okay, motion to award contract to Patricia Electric. Darlene, second. Robert, any questions? All in favor? Aye. Okay. Good job, Kate. Bus schedule printing, Chris. That's resolution 4D.
Thank you, Mr. Chairman. Good morning, everyone. This resolution is for bus schedule printing services. The invitation for bid was publicly let on September 23rd. 57 bid packages were sent out, of which 31 were sent to minority and medium business enterprises. An additional 7 bid packages were requested. 1 bid was received on October 24th from Courier Printing Corporation. There is a full 30% MWBE goal on this contract. Therefore, we recommend the board award the contract for bus schedule printing services to Courier Printing Corporation.
For a 5-year contract.
For a 5-year contract, yes.
Okay. Questions regarding that?
Do we know why one bid received out of 65 packages?
Right, so our policy is to go back and ask vendors that received the bid package why they chose not to submit a bid. General consensus was that it was beyond a lot of their capabilities.
You might already answer this, but what services are being used now? What is it, you see, who?
Who's the vendor now?
Who has the
It's
contract
Courier
now?
Printing.
It's the same company.
Yes.
Are they in New York State?
They're in Deposit, New York.
Any other questions? Need a motion? Julius, motion? Second? Tina? Any discussion? All in favor? Aye. Okay. Moving on to the sprinkler system. Chris, you're up. That's resolution 4H.
This resolution is for the sprinkler system conversion. There are 2 existing risers at our Syracuse facility that will be converted from compressed air to a nitrogen system to extend their useful life. This is a one-time purchase that will be paid for using 100% state grant funds. Pricing was received in the amount of $61,514 from Parkside Fire and Security. They are the current contract holder for sprinkler system inspections and repairs. Therefore, it is our recommendation that the board award the contract for sprinkler system conversion to Parkside Fire and Security.
Questions on the sprinkler system? 100% grant funds, good. Motion to award contract to Parkside Fire and Security. Darlene. Second. Julius, any discussion? All in favor? Aye. Moving on, resolution 4I. We got pretty far in the alphabet this meeting. I don't know the alphabet past that, so I'm gonna have to ask somebody over here to help me. So, resolution authorized the contract for the subway monthly rental reduction term. Good morning.
Good morning, Mr. Chairman. Good morning, everyone.
Good morning, Happy New Year.
Thank you. Happy New Year to you. I am seeking approval to move forward with a monthly rental reduction for our subway client or tenant down at the RTC. They have been struggling since the pandemic to keep the doors open there. And in order to help them avoid bankruptcy and closing this shop, they are requesting that we reduce their monthly rent to a total value of $2,500. Now, their actual rent would be $4,451, including a common area maintenance charge. So they have requested that they could meet us just about halfway at the $2,500 mark for the duration of their original contract through July of 2029. They have 2 5-year extensions after that point to where the contract would then be subject to the rate increases.
Okay, I think piece of the pie is better than no pie. Yeah, I think that the situation, what it is, we still offer a service. We work with a local firm here to still supply, so I'm supportive of it.
Is there anyone else interested in that? location?
We would have to put it out to public proposal to see if anybody else is interested in that space. We did that in 2019, and we signed a 3-year contract with 2 5-year options. And currently, the rental market, we still have our former Dunkin' Donuts space open, and there is not an interested party to that space that can afford to keep their doors open, unfortunately.
And if
The
I was the
pandemic
new
really
party
damaged.
bidding, I would wanna look at what the sales has been before I jump in.
So
So,
bus and train traffic through there too is still not back to pre-pandemic levels.
How long has the company been?
2 years.
As someone who just took a cross-country train trip, I can say, having this stuff in the stations is a blessing sometimes.
Yeah.
And so if you can keep somebody in there, it's worthwhile. You never know when you're gonna need it.
good. Okay, with that being said, I'm looking for a motion. Neil? Neil? Second, Luella. Any questions? All in favor? Aye. Okay. Linda, anything else?
That's everything.
Okay, thanks, folks. Let's take about 5 minutes, okay? Okay, we're gonna get this meeting going here.
Yeah.
Okay, everybody in place here? We all set over there, Hollywood? Okay?
Yes.
All right, we're gonna rise for the pledge, and it's gonna be leaded by Teresa Hudson. I pledge allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, for the minutes, we'll note that a quorum is present. The next
Leave the
meeting-
room.
I know. Colin, wait, hold on. Somebody audit my numbers. Next meeting date, I'll get you all back because you made more work for me. Next meeting date is February 24th. We'll have only an audit and finance committee meeting at 9 o'clock. At this point, I would like to recognize an outstanding employee with a few words. Teresa Hudson began her career at Central in June of 1992 as a part-time operator. She was promoted to a full-time operator on September 7th, 1993. For nearly 30 years, Teresa has demonstrated a professional and positive attitude. I can tell by the smile. It's a good smile. People don't usually smile all the time, so that's good. Earning her the respect of her co-workers and in the public that you actually served. Teresa's retirement began on January 1st, and her smile and dedication to her job will be greatly missed. And we wish her the best during her well-deserved retirement. Teresa, thank you on behalf of your Central family for everything you've done. You're a great asset to this place. Great. Have a little photo on?
Okay. Thank you.
Hey, Joe. Okay, on behalf of the Central family, I'll give you this little momentum for all your service that you did here.
That's right.
That's all right.
Okay, thank you.
Here we go. That's 1, 2, 3. Few words to the family.
I just want to thank each and every one of my superiors here at Central, all my coworkers, my supervisors, everyone for being so nice. It was exciting 30 years. I started here as a child. I was young when I started here. And I grew up here at Central, right along with Joe DeGray.
We grew up here together.
Yes, we
We're
did.
still waiting for Joe to grow up.
And I thank you all for everything here at Central.
Ms. Hudson, I would like to say this. I used to live on Hudson Street. My birth month is June. So, because I mentioned your last name is Hudson.
Yes.
Okay, and you retired, you started in June, right?
I started training in June.
Okay,
But I
that's,
started employee here in September.
that's my first month, June.
Oh, okay, thank you.
Once again, thank you for all your service. You really did an amazing job for us.
Thank you very much. Thank you. Okay. Thank you. Thank you.
I start looking at all these awards lately, you're talking about hundreds of years of service to the organization, which is amazing. Great. Okay. as we move on here, I need a motion to approve the regular meeting minutes of November 18th, 22. Can I have a motion?
So moved.
Okay, Julius, second. Neil? Questions? All in favor? Aye. Also need a motion to approve the regular minutes of December 16th, 2022. Luella, second. Monty? Any questions? All in favor? Aye. Okay. Moving on, our Chief Executive Officer's report, Brian Schultz.
Thank you, Mr. Chairman. Outlined there, as usual, is our current state of affairs with our funding that we received during COVID. Our ARP fund, we've drawn down just under $7.4 million of the $38.5 available. On December 15th, myself, Chris Tuff, Brent Dice went to attend the SMTC Policy Committee meeting. During this meeting, I reviewed the Unified Planning Work Program. And we discussed the SMTC budget and year-to-date financials. There was also a very good update from New York State DOT representatives on the I-81 project. As you're all aware, that's been halted, or was halted briefly based on a lawsuit. That stay has been lifted and they are allowed to continue planning. However, they cannot work on construction yet. Hopefully that'll be resolved here quickly. Community Grid Vision, again, several staff members and myself met virtually with City of Syracuse representatives, and they've hired Dover Kroll, their transportation planning firm. And what we discussed was really the Almond Street corridor and the effect the community grid will have. And then, any impact on BRT. I don't want to put you on the spot, Neil. Do you want to address anything with Dover's recommendations or their planning?
So Dover's been a very timely asset for the city. They have a lot of expertise and a lot of staff who can crunch the numbers, who can look over the state's DEIS, who can respond to comments, who can help the city in Centro to a degree respond to a lot of these things that are being proposed by New York State. So without them, I think we would be in a much more difficult position to make requests, to ask for design changes, and to really have a good seat at the table here when it comes down to the community grid. So we're happy that they're on board, and it sounds like Brian and his team have had good conversations with them as well.
Central Open House, Jackie's going to talk a little bit more about this in her report. On January 7th, we had an open house that was very successful. That was a result of a marketing campaign that we've done as well. January 9th, myself and some of our NIPTA partners, Board of Directors met virtually with Senator Tony's office. He chairs the Senate Transportation Committee. He's been a strong advocate for upstate transit. Again, I've mentioned in the past, and I'll continue to say it, we're in a great position. That we have the Senate and Assembly Transportation Committee chairs are upstate members of their respective houses, and that's really good news for us. It's been a great partnership. Met with ATAC virtually on the 17th. We meet quarterly. We discussed our ridership levels, BRT, the operator shortage, and again, that was another great meeting. Senate Climate Action Council. So I was asked to come testify as my role as vice chair of NIPTA. So Chris and I went down and spent an exciting day in Albany last week. It was. We were there for most of the day. I did a testimony in front of the committee. What this was it was a combination of finance, energy, and communications, and then the environmental conservation committees for the Senate. We discussed bus electrification, moving forward with zero-emission vehicles. And they just wanted to hear from Transit. There were many other groups represented there as well, so. And then, as I always report, you can see there, we've had various meetings internally on a number of different topics. After my submitting this report for inclusion today, we've had a couple of other meetings. Myself, Chris, Steve Cagle, Brandeis, we went over and met with the Common Council Transportation Committee. They asked us to come and talk about some different central initiatives, BRT, bus operator shortage, service levels. That was the first time we've been asked, first time in my recollection that we've been asked to come and talk in front of a Common Council committee, and it was great. There was members from the public there. They got up and spoke, very supportive of Centro and our efforts. Everyone's, the word's getting out about BRT. It's getting out through the community. There's a lot of excitement about it, a lot of positive feedback, so that's all very good. And then last night, Chris and I attended the Mayor's State of the City address. It was held at Corcoran High School. It was he did a great job addressing the city, very positive, very upbeat presentation. I really like the fact they included some kids from Corcoran High School. They did a great job. They had some of them singing. They had a drum solo, and the young gentleman that sang the national anthem. I mean, he knocked it out of the park.
Yeah.
He really did. And that's, he couldn't have been more than, 16, 17 years old. And he got up in front of that in that auditorium with several hundred people there, and just did a phenomenal job. The mayor gave his address, and Central got a nice shout out.
Yeah.
We had our own slide up on the screen, and I mentioned BRT and what a great initiative it is, and his support for that project. So, again, I've said this before too, it's refreshing, that we've got a city administration that is interested in public transit, and that's great news for us. It's a partnership that we haven't had in the past, so hopefully that will continue.
They spoke on the bus rapid transit system too. They spoke on that.
Yeah, we got a nice little shout out, so that was good. That's all I have, unless anyone has any questions.
I see that kid knocked it out the park on that.
He really did.
Wow.
He really did a great job. It's a tough song to sing. The address was his actual address was an hour. The whole event presentation was about an hour and a half. Yeah. So yeah, good night. Okay, that's all I have.
Okay, we'll move on to your senior staff.
Yep, Chris Brewer.
Thank you, Brian. Good morning, Mr. Chairman. Good morning, members of the board. I want to update the board on our next week. We have our quarterly RPM Reaching Productivity Milestones event. So it's also our year-end event that we will recognize not only the operator of the quarter and the maintenance of the quarter for the fourth quarter of 2022, but we'll also recognize the operator and maintenance employee of the year. So that'll take place next week. We'll start the show in Oswego and Auburn on Tuesday. We'll be in Utica and Oneida County on Wednesday, and then we'll be here in Syracuse on Thursday to recognize the employees of those awards. And then we also, we award it. We don't do the full, the list is extensive, but it's also our Safe Driving Award. So individuals that have gone the entire year without an accident, or more than 2 preventables, I believe. No preventables? Okay, sorry. No, non-preventables. But, it's great to show that and recognize that. I think this year we have more than 100 individuals that will probably be receiving that award company-wide. And some of them, I don't know the number offhand, are multiple years since we started this program in April of 21. So we will start that next week. And then, of course, we will update the board in the February meeting with those winners to have them recognized among the board as well. And that concludes my report, Brian, unless there's any questions.
Yeah. Jackie.
Good morning, everyone, again. So as Brian mentioned in his report, we did hold an open house event on January 7th. from 9 to noon. It was a very successful event. We had over 80 candidates from the public that showed up for the event. And at this event, not only did we do, applications, we did interviews, and we also did the, where they could try out the 40-foot bus over in the J-Lot. We had 2 buses over there. One was operated by our HR trainer, and then the other one, of course, Mr. Tuff took control of. So,
We're gonna get him a little hat.
Yeah.
It was fun.
Yeah.
It was quite the first one was a little scary. After that, everybody'd be surprised how intimidating it is at first for people to get behind the wheel. But once they get out there the first time, you settle in fairly quick.
Yeah, we had approximately 67 people actually operate the bus because we had to run their background and everything to make
No
sure that they had
accidents.
valid licenses. So, I mean, mostly at this event, was successful in the fact that from it, we hired 20 bus operators that just started this Monday for training.
Whoa.
Yes, yes.
It's our biggest class in a while.
Yes, yeah, so we're really happy with the turnout, and I really have to thank everybody who helped out to get this event off and going. My entire HR staff who was there, marketing with the campaign that, and the advertising that they did for this, along with, our maintenance managers, our operation managers who were here that day, and the executives, Mr. Schultz, Joe DeGray, and Mr. Hoff, who actually jumped in and did interviews with the potential candidates. So thank you, everybody, for making this a success. We're looking to hold another event on March 25th. Same thing, from 9 to noon. We're gonna have, on-site interviews and everything. Marketing is putting together the campaign and advertisement right now. That'll go out to the public, and hopefully this will be another great success, and hopefully we can get, 20 drivers to start in April. So.
It's a Saturday.
I know some of the drivers, some of the prospective drivers,
I was coming.
they say they was, when they're driving the bus, they're very intimidated to them.
Uh-huh.
Driving the bus.
Yeah, but it was amazing.
But they enjoyed it.
The feedback that we got from a lot of people who went out there to try the bus, because when they came back, they were like, oh, that wasn't too bad.
Yeah.
So it was great.
Where did they drive the bus?
Right in the J-Lot.
Yes.
Oh,
Across the
okay.
street, yeah. We had them doing like a.
So
It's like, you checked for license,
Yeah.
but where did you let them go?
We actually, what we did is we actually had a shuttle, so
Yeah,
the
shuttle,
event
yeah,
took
yeah.
place right here.
Yeah.
And we had a color bus shuttle out front, and they transported them right over to the J-Lot and brought them back.
I'm glad they had that lot over there, because I was wondering where we were gonna have it.
Yeah.
Yeah.
We asked Julius if he wanted to try it, but he said no.
I drove years, I drove like, what was it,
The rodeo.
2000 something, the first,
Yeah.
yeah, and Brian aced it, but who knew that he had a few perks behind him.
In my younger years,
Yeah.
you would've asked me, I would've been
I was
there.
taking those barricades down left and right.
Brian did a good job, Dave, very good job, and I thought I gave him a little competition, but I was so excited at the end that they had the cone up, and
Yeah.
thank God that wasn't a person, because I wasn't paying attention, I drove right through it. Yeah. The cone meant stop, and I went straight.
You're a mechanic.
Any other questions?
The one driver said to me, he said, I drove the bus forward, but the guy told me that was it. He wanted to let him back it up and everything, because he said
Baby
that was,
steps.
that was intimidating for him to do it. But he said, why didn't I said, apparently he must have did something.
You'd have to ask Roger that one. I let everybody back up the bus. So I'm not sure what that would be. But, I mean, most of them, they settled in very quick.
Yeah.
We allow them to make a few turns in the lot, actual do a stop, adjust their mirrors, basic instruction on the bus.
Yeah.
And then they backed it up about 50 feet between 2 cones.
Mhm.
And most of them did fairly well.
Do you have very many men?
Yeah, we had quite a few.
Absolutely, absolutely. Very diverse group of individuals
Yeah.
we attracted, which is great. One other thing I just want to mention is that HR also went over to the Southwest Community Center on Martin Luther King Day for their event. We were there, we had a table there just to kind of promote Centro and employment opportunities that we have here.
Yeah, Southwest Community Center Director, Williams asked me to make sure that his name is on the list when you email information to him and stuff like that.
Okay, we will do that.
What was the average age of the applicants?
Gosh,
No, were they older or they were?
Mid.
Looking for something part-time, Bob?
It was-
You can come and drive at our next one if you want.
It was a mixed age. I mean,
Yeah.
just based on visual. I mean, it was a mixed group. We've had some people, it was kind of a second career to them, and some people started out as a career, so.
We can't ask age, but I mean, the ones I interviewed, I think there was one gentleman that was, in his 50s, looking for a second career. There was several that were younger, in their 20s.
Yes,
So,
yeah,
it was
we
good.
had a variation of, a variety of all different ages, so.
Thanks, Jim.
Thank you very much.
Good job.
Steve?
Thank you, Brian. Good morning, Mr. Chairman. Good morning, members. I'll start this morning, giving you an update on where we stand for ridership in the month of December. It's a good month. Our overall ridership, when you take into account all of the services we provide, including our contracted services, was about 75% of where it was pre-pandemic. So that's the highest it's been since we got into this mess in February of 2020. From a core ridership within city services, it's about 65%. Syracuse is up to 63%, that's good. Some of the smaller properties have rebounded much quicker. Auburn 73%, Oswego 88%, Utica 73%, and Rome 68%. So it's creeping back. It's a very slow creep, but we're getting back to the, it's going in the right direction. 1 or 2% a month would be great. January's looking strong so far, so I anticipate those numbers will be similar next month when I come back to give you some more ridership numbers. You've heard a lot this morning about bus rapid transit. We are, it's part of our system redesign, a concept called Exploring Tomorrow's Transit that we're partnering with SMTC. We made an announcement, put a press release out, and we got a little bit of feedback, but I'll tell you, when you put something on social media, on Twitter and Facebook, we got bombarded with responses. I've been doing interviews with television stations, newspapers, radio stations. It's been nonstop. I'm doing one this afternoon. So the community is really engaged about not just BRT, but system redesign. We're talking about on-demand services like scooter share. So there's a lot going on that's part of the overall product of making Central a big picture transportation network for our communities. So that's very exciting. As Jackie mentioned, the open house that's coming up. I don't know if you all saw the commercial that we ran, including the first one.
Could we not?
A little different.
If you didn't see it, you don't have a TV or you don't have a radio.
That's the goal. The goal is to really, in a short period of time, really saturate the market so you don't miss anybody. So we'll be doing the same for the upcoming open house. It's going to be a follow-up commercial to what we did. It's going to be very similar. Don't want to mess too much with success, so I want to keep the similar concept. Hopefully we can get a like number of individuals to show up for our March open house and eventually for our April fest. And with regard to some more details on some of the special projects that we are undergoing, I'm going to bring Brent Tice up to give you more details on system redesign and everything else. Thank you.
Thanks. Good morning.
So we've started to talk about special projects already this morning. To talk a little bit more, give you some more details about Exploring Tomorrow's Transit that Steve was just discussing. Again, we're working with SMTC, as you know, in this public outreach effort to really improve our overall transportation system. It's not about one project, but it's about our overall system to look at multiple options and see how we can make it the most efficient we can. It is including reviewing our fixed route system plus new systems like on-demand, bike share, BRT, and potentially other transportation services in the community. So we're super excited this month and next month. We've got some pop-up events scheduled for the Exploring Tomorrow's Transit. The purpose of these events are really to draw traffic to the website. We have a webpage, SMTC has a webpage about this effort, and get survey results. So we are looking at both riders and non-riders. We want input from the entire community. And our pop-up events this month and next month will be at Salt City Market. We're going to the Dome. We'll be at OCC. We're also going to participate in the Winterfest activities so we can get some traffic from there. We'll be hitting grocery stores and public events. So we'll be all over these next couple months. And again, it's really a pretty straightforward effort right now because it's about drawing traffic to our informational web pages and to our surveys. The next step after that will be compiling all that information that we got from folks and start to have more open house meetings where we start discussing, okay, this is what we heard, now let's talk about it in earnest. So super excited about that process. And speaking of some of the special projects, BRT, wanted to give you some more information about that. We have had ongoing discussions with stakeholders such as SMTC, the City of Syracuse. We are working, as you know, with our consultant, IBI Group, and they are just about to start a 6-month process where they are updating the Smart One study. It's really focused on delivering the planning and analysis work required to move the project forward, and it's really just updating some of the data because it's from the original study was from 2018, and then adding a little bit more analysis. It will end with deliverables such as operational assessments, traffic assessments, and a service plan for BRT development, as well as a BRT implementation plan. So after this next step, we will have a lot more information as to time frame and how it all will play out. We do know that the time frame will be dependent on our resources, so of course drivers, vehicles, etc. Our goal is to be on the road in 2026. So we have some details, we have more details to come, and just a lot of exciting things happening at Central. I could go on, but I'm not going to. I'm going to say, hey, next month I'll have way more exciting news. We've had a couple recent meetings this week that I didn't get a chance to write up, and some things that we need to iron out before I can tell you guys about it. But be excited that next month more to come about new stuff.
So your, the input that you're gonna get from the Winterfest and OCC and on the website, are you gonna share that?
Yes, absolutely.
Is there a time frame of when that input's gonna be done that you're gonna share it?
So the entire process should be finished in the fall of this year, the entire Exploring Tomorrow's Transit process.
Okay.
However, by April or May-ish, we'll have some topics that we'll know this has been a hot topic of the survey, and this is what we're gonna discuss in those open houses and more detailed meetings.
There'll be
So-
periodic updates, yeah.
Yeah. And in those open house meetings that will happen in the summer, we'll break out into smaller groups and let people really talk about what they, are interested in.
Excellent, good job. Jeff?
Thank you, Brian. Good morning, Mr. Chairman. Good morning, everybody. I just want to tell you that we signed an agreement with Voith Transmission for in-house warranty work. We have 95% of our fleet uses Voith transmissions, and this allows us to train our employees to do the work, which they will be coming out in March, to train them on how to diagnose and repair the transmissions, and then we get to claim the labor and the parts for the warranty. We don't send it back out to Voith or another dealer. Just recently, we had 2 buses out at a dealer, and it's been sitting there for months. We asked them, even though we're not trained yet, can we have them come here and do the work? They allowed us to do it. We were able to do it, no problem, got it back on the road quickly. Now, we are trying to do this with other vendors. One is gonna be Ford, and the other is Cummins, just get the work internal, so we can keep the jobs with our mechanics and reclaim the warranty work.
Have you thought about, just as an idea, with the school system, with their transportation, repair motors and stuff, have you thought about doing some type of training program with the school system?
Through the school system?
Yeah. I don't know.
As far as partnering with the school in their auto mechanics
Auto
program,
mechanic, right.
yes. We've had a conversation with Superintendent Davis a couple months ago. I know he's new into his position, but it is a conversation we've had with them as well as OCC.
That's good, yeah.
Any other questions? Thanks for the report. Thanks.
Mike?
Good morning, everyone.
Good morning.
Hope you're not tired as the day goes on here. In IT, this past month, we actually did some upgrades. We did an upgrade to PPS, which is our Human Resource Information System, our bill system, which is our accounting system, and ROS, which is a network monitoring system. We also put many items up for auction this past month, about 50 items for auction. If they don't get sold, we will be recycling those, but they're pretty much at the day. Bruce and Bob went out to Auburn and replaced the network switch out there. So yet another thing that we did for upgrading things to keep things going. Next up will be Oswego and Utica for network switch upgrades. We're also looking at upgrading the maintenance connection program. Jim Anderson put it into a test environment. Carlos over here actually went through and did an upgrade, and now it's in testing for the general users to be able to utilize it. That should go, I'm not recommending difficulty for that. We did have an unusual event this week. Our facilities in Oneida had an intermittent problem being able to connect to our systems here in Syracuse, which caused some outages, I guess I would say. Northland Communications did a major switch replacement on Friday, late Friday night, early Saturday morning, which took the system offline. Carlos, Bruce, Bob, and we actually worked with other engineers trying to figure out what the situation was. It literally took almost 3.5 days to resolve it. Digitized information, when it goes across the network, goes into little compartmentalized packets. These packets have sizes that are designated to them. Northland's size was different than our size. They had it at a standard 1500, we're at 1472. That caused a missynchronization with a thing that was going on. That was discovered Wednesday morning and resolved, and since then, there's been no problems whatsoever with it, with the network itself. So it was a good lesson learned from that perspective.
Do they normally tell you when they're going out to do
They do tell us that they're going to do it, but they've done it many times over the years. This was the first time we've had this kind of situation, quite honestly. And thinking in terms of MTUs, what we call MTUs, maximum transit unit size, you just don't normally think about it kind of thing. It's one of those weird things that just kind of happen. So, knock on wood, like I said, it was a learning exercise. If it ever happens again, we'll know to check it at first. Any other questions?
Thank you. Thanks, Mike. Concludes our reports. We're going to have Joe and we're going to go through the meeting. Okay. Joe, there was a discussion in our last meeting, right, Joe? Correct me if I'm wrong, regarding the transportation safety plan?
That is correct. Last month, we brought to the board the annual approval of our system safety plan called Public Transportation Agency Safety Plan. That is a yearly event for the board to approve, and we made some minor modifications to it, as we always do every year. The one biggest change, just as a reminder, was the addition of a Labor Management Safety Committee, which involves the ATU along with ourselves in reviewing and approving the plan prior to bringing it to the board. So just looking for a ratification of that from last month.
It was discussed in detail in our last meeting. Motion to accept this, Monty. Second. Tina, any discussion? All in favor? Aye. Thank you. Okay, moving on to the Audit and Finance Committee report. Oh, I'm sorry, Joe, you want to do your regular report now?
It's all right.
I'm just trying to be cautious with time because things are getting a little bit late. It's all right. Thanks, Joe. I always got to do it to you. I don't know why, Joe. You're a senior guy, that's why.
I'm used to it.
Yeah.
All right, very quickly, December 31st ended our third quarter for call bus statistics in our specialized transportation. Again, a pretty big increase, 17%, over 38,000 rides provided over our entire system. So that's a lot for us. About 1,200 customers are sharing in those 38,000 rides. As you heard from Linda, they're actually, we're designating a reserve for paratransit because of the increases, and I don't see it slowing down. So it's going to continue probably, I don't know quite on this growth pattern, but it continues to grow. In addition, we have major growth in Oswego, which we've actually added another call bus operator up there. So we're moving with the times. The good news is much business as we're taking in right now. We're still meeting our standards. We're still meeting the zero denial, which for those folks that may not be familiar, we are not allowed not to accept a ride on a given day. So if 600 people call today, they get 600 rides. If 800 people call, we give 800 rides. So it's a pretty monumental task to put every ride out every single day without telling a customer we can't bring it. So it's a reflection of the staff that we have. Even though we're down a little bit on the staff side, we're down a little bit on the bus operator side, we're still making this work, and we're getting it done. So it's a good job by all in that department.
Are the drivers for the call bus the same, or do you have to have the same license to drive a call bus?
Correct.
As you do to drive
That is
a bus?
correct. You have to have a CDL.
For one of those little ones, you do?
Yes.
Joe, I see you're adding somebody in Oswego.
That's correct.
As a rider, how about Onondaga? 'Cause
We're
woo-hoo!
working on that. That's, you just heard from Jackie.
But I mean, this new class, are we gonna pull some people to the call bus side? Cause I ride all the time, we are jammed.
I know. I completely understand completely.
And all I hear is, we don't get bathroom breaks from every single driver I talk to. I told them.
I will not get into.
Yeah, I know. I just tell them,
particular
go do,
situation.
I said, tell them,
Well,
do what you
maybe
have
it's
to.
true. It is, and again, they step up, okay? Our
Oh, yeah.
operators, our vendors are all stepping up. It's a fine line between budget and reality. And
I know.
when you're dealing with call bus, it's more reality than budget, and that's, again, why the reserve.
Oh, yeah, I back at 100, I back you 100% on that bus. I say, we're doing what we can do.
Yeah.
We can't
So,
perform
We're
magic.
hoping that, obviously, through this process of getting these operators in, we can make changes and make the proper changes as well.
Julius?
How simple is it for people to apply for the call bus? Because a lot of people.
I don't know, it's not simple.
Can I answer that, seeing I do that all the
How does
time?
that-
It's a simple application. The hardest part is getting your doctor to fill out his part and sending it back. Literally, that is what makes people bang their heads on walls.
Yeah, that's what, cause I've been talking to some older people, well, I'm not part of older people. Now, they were saying, I don't know how to do this and stuff like this, how to make, they don't have nobody to help them with that and stuff like that.
Julius, if you get somebody asking you a question you don't know how, email me, I'll give you the answer. We sat down and figured it out. I have been riding on Callabus for 49 years.
49 years?
Wow.
Yeah.
No, I'm sorry, 45. But it's still.
So you're a pro at it
I've been around when it was zoned.
Yeah.
And you could only get rides a couple times a week because it was zoned.
Zone and country shuttle.
So, question as we go forward, are the buses the call buses, are they gonna remain little buses, or are we looking at going to vans? And if it's a van serving the same purpose, do you still need a CDL license? Still
Once
would?
once you're operating a vehicle with, where you're having somebody with a mobility device.
Yeah, you need a CDL.
You need to have it.
Really?
And then
Medical
the challenge
transport.
with the vans and the smaller vehicle is that now, once you put a mobility device in there.
Oh, you can use space.
You lose, you can't, you really can't put anybody else.
Julius?
This may not make sense in what I'm saying, but for my information, how is that gonna work with the rapid transfer system that you're thinking about? But
That won't have an
It won't
effect.
have
an
on
effect.
us. No.
Monty, even the people who drive like the Suburbans and all the medical transports, they all have to be CDLs.
Any questions for Joe?
All set, Mr. Chairman?
Okay, I got it. I called it. All that was done. Okay. Going to Audit and Finance Committee. All these were discussed last month and this month, and we're gonna move these fairly quick. Motion to approve the November 30th, 22 statement of revenues expenses was approved and moved to the full board. Can I have a motion, please?
So
Tina,
moved.
second. Darlene, any discussion? All in favor? Aye. Motion to approve December 31st financial statements. Motion. Tina, second. Darlene, any discussion? All in favor? Aye. Motion to ratify the stop-loss renewal. Need a motion? Robert, second. Julius, any discussion? All in favor? Aye. Motion to approve substance abuse policy modification. Luella, second. Monty, any discussion? All in favor? Aye. Okay. Motion to approve J.P. Morgan Chase Bank, the new account. Darlene, second. Monty, any discussion? All in favor? Aye. Establish the reserve paratransit service. Motion to approve. Tina? Okay, second. Darlene, any discussion? All in favor? Aye. Additional signatory on the authorization for M&T Bank. We have a motion from Julius, second. Robert, any discussion? All in favor? Aye. Okay, purchasing of the 64 bus procurement. Can I have a motion? Neil, second. Monty, any discussion? All in favor? Aye. Motion to approve the Washington Piggyback 19 bus purchase. Motion, Monty, second. Neil, any discussion? All in favor? Aye. Backup generator installation and in motion. Julius, second. Monty, any discussion? All in favor? Aye. Bus schedule printing in motion. Joe, second. Darlene, any discussion? All in favor? Aye. The sprinkler system motion. Neil, second. Monty, any discussion? All in favor? Aye. Resolution regarding the subway rent reduction agreement. I need a motion. Neil, second. Luella, any discussion? All in favor? Aye. Okay. Mr. Robert.
This morning, we had a pension committee meeting, and Alesco Advisors gave a detailed overview and review of the market, in-depth presentation, and they did a good job. And I'd like to add one thing. One of the numbers I heard was the level of funding of the pension plan, and that's very significant, and that's a good number. This concludes my pension committee report.
Old business, I have one item. This is something that I just can't get away from. There was something about 18 years ago, Utica Transit Authority, a parcel of land that's just won't go away. So I want to turn it over to our attorney here.
So, I would like to ask the board to authorize the filing of a lawsuit although it's a very small lawsuit that no one is going to oppose, that we are going to file jointly with Oneida County. We are working on a lease for our bus garage in Utica, where we lease the land for this garage from Oneida County. In working on the lease, we discovered that one of the parcels of land is still technically owned not by the county but by the Utica Transit Authority, which no longer exists, which dissolved, but it still is the title holder in the official records. So we need a court order declaring that the county owns this land so that the county can continue to rent it to us. And I will be actually giving you an affidavit to help with this.
Right. It was, I think I'm the last, it's like the Alamo, the last survivor.
The chairman was on the UTA board at the time that it dissolved and came over to
It was a
Citrus.
local authority.
So that's actually helpful in this situation because you can
I
kind
can
of.
say I can't remember, I can't recall.
You'll be great, you'll be great, you're the star witness. What I would request is if the board could authorize the filing of a quiet title lawsuit with Oneida County in order to obtain a court order declaring that the county owns the land they will lease to us for our Utica bus garage.
Okay, with that being said, we're protected here, we're indemnified. Luella, second. Tina's gonna step up. We're not fooling around today. Okay, any discussion? All in favor, aye.
Aye.
Okay, anyone? Okay, it was a pleasure today. We got a lot of work done. Thank you for the staff, for all your efforts. And thank you for the board and everybody else. Thank you for the video. Have a great weekend. Take care. We're adjourned.
And Happy New Year to everybody.
And